Hey guys, this is Dontez Lindsay, the lead trainer of StockCraft, as well as the general manager of TradeZero LLC. Today, we're going to have another video about a few more lessons that are going to help you get better at your trading. We're going to do that by slowly going over a few of the low cap recaps that we've had over the past few days. And we'll throw in a few lessons as I talk about what I was thinking while trading, as well as things around the topic. Without further ado, I just wanted to remind you that I am not a financial advisor, and this is for entertainment purposes only. Let's get right into the video. So first thing, I'm going to take some snippets from my stream, and this won't take too long. It'll probably be like 4 minutes worth of snippets. A little context for the first one. This is SGMA. It was a first red day. And I, spoiler alert, I missed it. And I missed it mostly because I had biases for going long, and I didn't even try to short it. And that's around the area that we're gonna touch on this. And the reason I thought that is because, it ran up the previous day and then it pulled back. I just didn't assume that that resistance would hold because it's over in the pre-market, aftermarket area. And I just didn't see this actually coming back up anytime soon. But I did think about a half spike bounce. And so that's what I was pretty much trying to aim for. And you'll see it in the video.
Yeah, about 13.4.
So I said 13.4 because that was what my calculations told me it was going to do.
What is the sector for this one? Yeah, legit, they're all biotech. What is this? Okay, this one's technology. And they're all under 5 million. Now, PHTX. This was okay, I'm trying to figure out my favorite, or top 3. But there's nothing just sticking out as this is ideal, blah, blah, blah. They're all just up there, or recent runners, or recent gap up shorts that turned to bounce shorts. First red days that turned into potential bounce shorts even further. What do you call that? Gap fills that turned into overextended cap down, all that type of stuff. See, now this is already up 50%, and we just watched it come from 20%. And this was connected to BFRI, if I remember right.
So with the SGMA, I said it was the first red day, but I don't track a lot of first red days, so I wasn't familiar with what I can get away with it on that. So I was trying to go for the dip buy at that point. Nothing really I wanted to say about that, but yeah, just throwing that out there.
BFRI, this actually is not usable. BLU. There's nothing heavy for it to go through.
Okay, the reason I brought this snippet up, it's actually supposed to be shorter than that. Just showing you where I put my mark. And, spoiler alert, we can just go to StockCraft and we'll see where it actually found its support. Come down here to the chart. And on that day, that was 13th. And so you see it found it at 13.5 when you go to the right chart to see it. That's 5 minutes. And so, that's accurate. Yay. Now, let's continue.
Yeah. When there's a crystal ball, when you go to the mystic or the magician, or what do you call this, the fortune tellers, sometimes I try to tell the future by rubbing my own head. I didn't realize that until I started watching videos of myself, and I'm like, wow.
Okay. I forgot to put that snippet in there. We'll leave that for you guys. That one was for me. It makes me feel special. All fuzzy inside. Okay, here we go.
7 and about 8. Those are the early shorts where they are. And so if you do little squeeze points from there, you can see that's all there's 1, potentially 2 squeezes that happen already. And so now you have to figure out where the third early shorts are going to be. How do I say this? This isn't worth a short, but okay, this isn't worth an ideal short, but it is kind of meeting the bare minimum for a short, if that makes sense. It's nothing worth tracking, but this would definitely attract more shorts, and then you can use those shorts to go a little bit higher. But when I'm saying higher, it's only going to be 80%. That's all I'm really gonna say about that. But what am I?
What I was talking about there was, I think someone asked me, no, they were talking about like, would you short this? And I was telling them reasons why I wouldn't short this. The pattern that this showed was a pre-market breakout. And it's one of those things where you would have had to recognize that in the pre-market for you to be able to use it effectively. At this point, they were asking, is there any other type of edge on this? Can I buy it? What's going to happen? And, you know, other people are like, oh, this is going to go 100 to 200%. And I'm just like, you're wrong. The market cap's too high. Float is too high. Max you can get out of this is 80%. I was like, and you know, you want to put your little slippage statistics on there, and they give you like 2 extra percent. And, you know, when you do that, pretty much, I want to say I'm right, or I was right. What chart was that? BOU. So remember I said 80% went up to 9.8. And so that's 80%, right? Yeah, that's 80% because it came from 560. And then divide that by oh wait a second. It opened at like 7 something. It was like 7. There it is, 785. Now 785. Go. 785 minus 5.6 times 1.8 plus 5.6, 9.65 times 1.025. This is my slippage statistics, and that gives me 9.89. Or this is one of them for this oversized market cap and float. And those are my personal statistics for the specific type. Now, with that, we got 9.89, and that put us how close? About like 5 cents off. Now that's okay. And remember, I put the slippage statistics on there. So like with that off, how did we get? How much did we get? Let's see. 9.65. So if I just did 0.025 or 1.02, that actually would have put me a little bit closer. But I always like putting that little 5 on there just to give me like enough. It's like I'd rather stay off like by like 1% or like a couple cents. You know, better safe than sorry.
Could you share the pattern criteria list? I could, but no. They're like, so how do I say it? Even though like I'm sharing everything for free, I feel like I can confidently do that because like people still out there have to buy the DVD. They still have to buy the Freedom Challenge, the Tier 1, and like all that stuff. My job isn't to teach you guys. That's Steven's job. My job is more of like entertainment / growing an account in front of you guys when there's ideal plays.
Yeah. So what I was saying, there was someone asked me, hey, could you give me your statistics? I'm just like, no. And someone's like, oh, can you give me your criteria? I'm just like, no. I'm just like, everything you're asking for, that's stuff that's out there. People are paying like anywhere from hundreds to thousands for, and you're asking for it for free. And like, I don't have anything friendly to say to that, other than like, you know, no. And, you know, the stuff I do give out, like, I already feel guilty about giving it out already. But, you know, we're eventually going to give out everything that you need to get started, as well as like, you know, put like a little cherry on top of the cake type thing. But other than that, let me just get in this last one. And I mentioned at the end, it's not my job to like teach you guys. That's not what this channel is about. Mine is to be like the lead trainer of StockCraft when I eventually like, you know, put everything together and then teach you guys the basics and like principles and concepts and stuff like that. And then you go do what it's meant to do, which is, take your creative ideas and stuff like that and then apply them through StockCraft to hone your edge and, make your strategy robust and stuff like that. When I'm trading like this, that's more of just me practicing my own skills. And then, I like figuring stuff out with you guys. There's going to be a point where I'm only trying to share like 30 to 50%, because anything past that point, it wouldn't be fair to Steven. So last one.
Short PTPI. I don't remember if I explained that or not. Everything's like in one ear, out the other. So actually I think I did the 420. Because it's half the where'd you go? Again, it's just basic statistics and math. So this went from like 320 to 520. So half of that would be $1. And so you go $1 down, that's 420. Entire volume that day, 240. How do I? 15, or not 50%, 15 minutes. So at that 420, that's where it's the heaviest amount of like resistance. But for it to be able to like get past like, the volume up to this point, let's see what that be. Because you got like volume on this side and you got volume on this side. Going up, it's resistance. Going down, it's a support. But once.
Yep. All right. That's enough right there. I don't want to give you everything because, again, that's not what I'm here to do. But I am giving you a lot of ways and perspectives and angles to look at this. And that by itself is already going to like take you a long way. Because again, like we're meta traders. Like we're legit trying to do the minimum stuff that you need to know. And I'm just giving out all these tips. And so, yeah. Other than that, just to do a little recap. Wait, first let me talk about that last point. When I mentioned the 420, I'll hide this. There you are. PTPI. I mentioned that this was at 420, and it just wanted to show you how that ended up when I said that, there was a lot of resistance right there. It did get to the point where it tested 420, and it did its little slippage above. All this is within to where if you actually made your initial entry around this area, because the resistance is there, you would have made a decent amount of money. And usually when it comes to like these stocks under like $5, you risk anywhere from like 20 to 50 cents. And, that's still within our range. Like you only went up to 438. And so, we did a good job in our calculations. And so, all right, we're going to throw in this quick lesson on some basic equations that, will help you out. First thing is the people out there that go for the gap up shorts or any kind of spike at the morning. Sometimes you want to split your position in multiple positions. And I'll give you a quick equation on how to do that. First things first is this is how you want to build your position. We'll look at this scenario. Let's say you borrow 6,000 shares, you have a 30K account, and you have a max loss of 3K. The stock is $5, and you see there's some kind of resistance at 5.5. The volume is not as crowded as you would want it to be, and you have no clue where the top is going to be. It could be over, it could be under when it falls short, but you're going to shoot your shot under the resistance, and then you're going to shoot your shot when it gets to the resistance because the resistance isn't very heavy. So you're going to build your position around it because most of the time it actually doesn't have a position and you're just shooting into the darkness. Now, what I want to say is the way you want to look at this is you're going to get a fraction of your borrows and you're going to multiply it by the price of the entry you take. And the product of that, or what comes out of it, is going to give you price shares. And that's going to pretty much give you the price of the fraction compared to the whole. And that might be hard to follow, but what it pretty much means is you took your shares, you divide it by the total amount of shares, and you multiply it by your entry price. And that gave you the first position share price. And what that looks like is when you come down here, remember in our scenario, we have 6,000. So the first position was 2,000 and the second position was 4,000 shares. And so we took 2,000 shares divided by 6,000 shares, multiplied it by 5, where we took our first entry. and that gave us 1.6 as position share price. And so that's what this means. Now, what you do with that is you take the second position or third position, depending on the number of positions you take, then you add them together, and that's going to give you the average price. And you want to do that before you actually trade, because it's going to give you a better understanding of where your average is going to fall, because every second you waste is going to bring that average up or it's going to bring that average down. And you want to get that average as close as you possibly can to the place you think is the safest. And so if I come in at 5 and I know there's a resistance at anywhere from like 550 to like 530, especially if it's consistent resistance where instead of an individual resistance where you can't really tell where it is, but you can kind of get an idea of where it's going to fall. You want it to be under the resistance so you can have something to risk off of. Because when it gets above that resistance, at that point, you're playing a dangerous game in multiple ways. And so back to the scenario. So in this scenario, we took 2,000 shares and then 4,000 shares, and then we added them together when we multiplied them by their entry price, and we got 5.336 as the price average. What that looks like is first position plus second position equal price average. Now, that just gives us the price average. Let's say we wanted to also have an idea of how much we wanted to risk in terms of either risk percentage or risk dollar. And if we come back up, we saw that we have a max loss of 3K. Knowing that, let's say we wanted to get a percentage of what that is. Obviously, knowing that, basic math, we see this is 30K, so 3K is 10%. Spoiler alert. Probably said that backwards, but yeah. Now, what we can do with that is we can say risk percentage times average price gives us risk percentage dollar. And so what that looks like is we know that 10% times 5 is equal to 50 cents. And now that we know that, wherever we make our initial average price, and we understand it's a $5 stock, and we're trying to risk 10%, we know that 10% is going to be 50 cents away from wherever our average is. Let's say instead of building position, we just went in all at once at 5. That means if we wanted to risk 10%, which is the max 3K, we risk 50 cents. Now, if this was a $2 stock, it'd be the same concept. We'd risk 20 cents on a $2 stock to risk that 10%. And again, we're taking 30K position. And so that's going to give us still a 3K loss. The only difference is the price of the stock that we're trading. And so that's how you can use the risk percentage times the average price is equal to the risk percentage in terms of dollar. Now, another way you can go about that is you could take the max loss directly and you can divide it by the exposure, the total amount of money inside of the position that you're willing to take. And so above, we saw that we borrowed 6,000 shares. Now let's say we wanted to put all 6,000 shares at $5. Now what that's going to look like is $5 times 6,000 shares gives us 30K. Now with that 30K, we know this is a 10% risk. And that's how you will get your risk in terms of percentage. If you were trying to have a specific percentage when it comes to your max loss, and you can shift the equation to get one or the other if you're missing one of the variables. Last way I want to show you is one of the quickest ways to get the dollar in terms of risk percentage. Let's say you wanted to risk, in this scenario, it says 2.5%. And you're going in at 4.79. Instead of just trying it the long way or doing it this way, we can just add a 1 onto the percentage that's already given. And so if we're trying to risk 2.4%, instead of just doing the other way we learned, we can just do 1 plus whatever percentage we're trying to risk, and then multiply that by the price entry, and then that will give us our potential cover point. At that point, where we're not risking 10%, we're risking 2.4%, it automatically converts it into the dollar amount. And so now, if we get in at 4.79, we can cover at 4.9. If that did make sense, we could do it where it fits our example, where 1 plus 0.0 times $5 is equal to 550 cover point. And that's pretty much what we have up here. Now, these are the key ways that I like to make very quick assessments of where I'm going to enter, how much I'm going to risk, and potential places where I think people are going to be. And you'll see in the video other ways to use equations and quick statistic and analysis to give you that edge you want to get the maximum gain and maximum risk management that you need. And you need that in trading if you want to be consistently profitable. Hopefully that helps. That should give you a few ideas of what you can do. Other than that, hope you liked the video. And if you did, please like and subscribe. It really helps out the channel. I'll see you guys next time. Peace.